Hi, everyone. Thanks for joining. We have Sterling Birdsong on here today. He's of Bay First National Bank, and he works in their credit bench division, which focuses on the SBA. Sterling, thanks for taking the time.
Yeah, absolutely, Dennis. It's a pleasure to be here. I'm glad that we connected, and hopefully, I'll be able to share some insight with your folks today.
Yeah, that'd be great. I think on our end, we have a lot of individuals who are trying to understand more about the process, how to buy a small business, what it entails. So, wanted to bring in some of the experts to talk through it. To start, would you mind just giving us a little bit of background on yourself and maybe how many SBA deals you've done or how many years you've been in the SBA field working on it?
Yeah, sure. So I've been in banking since 2012. I graduated that year and pretty much went straight into banking. It wasn't something that I had planned. I kind of fell into it in a backwards way. My mom actually worked at a funeral home here in Tampa, and a gentleman came in named Jim Furman. And if you're in Tampa, you know the Furman family. They own probably 10 dealerships or so here. And my mom built a rapport with him and said, "Hey, I have a son looking for an internship. Do you know anybody?" Thinking that he would send me to potentially work on a car dealership, but turns out he was on the board of the Bank of Tampa. And so he said, "Yeah, give this guy a call and tell him that Jim Furman sent you." And so that was the start of my banking career. In 2012, I was an intern at Bank of Tampa, did that for 6 months. And then I went and joined US Ameribank, where I was a small business underwriter. So I was doing conventional underwriting, and I did that for 3 years. We then got bought by Valley Bank. And around that time in 2016, is when I joined the SBA lending team as a lender. I just always knew I wanted to be a lender, and I didn't really know what SBA even stood for when I took the job. But I just knew that the people on the lending side were looking like they had a lot more fun and they were making a lot more money, and that's where I wanted to be. So they gave me the opportunity, and I jumped at it. And yeah, I've been in SBA lending now since 2016. Haven't looked back. I joined Bay First back in 2021, and I've been blessed to be the top producer here the last 2 years in a row. Did 50 million both years. So, I couldn't tell you exactly how many SBA loans I've done in my career, but I've done quite a few, and I've certainly hit my stride as an SBA lender. I'm happy to share my knowledge and expertise as much as I can.
That's great. No, we only have top producers here on the show, so no, it's definitely great to have you. Starting from the top, I think the number one question we get is what the heck is an SBA loan? What does SBA stand for? All that stuff. But for you, it's just can you kind of provide if I have the desire to go buy a business, what is the SBA process from a high level, and how does it work with owners in the space?
Sure. SBA, Small Business Administration, right? So, what it means to you as a potential buyer of a business, it means that a bank is more likely to take a risk on your transaction because the government is essentially acting as an additional guarantor. So, the SBA is going to come and they're going to guarantee 75 to 85% of the outstanding principal balance on the note, and sometimes even 90% in some rare circumstances. There is the ITL program that's out there as well. But for the most part, it's typically a 75% guarantee that the SBA is giving to the bank, saying that, hey, if this person were to default on this loan, essentially you're on the hook for only 25% instead of being on the hook for the full 100%, which obviously makes a huge difference to a bank in terms of their risk. And so they're willing to then make more loans and undersecured loans. So in terms of the process for a buyer, typically when I'm speaking to a buyer, they've already identified the business that they want to purchase. That's when I would say is usually a good time to engage with a lender. You can do it earlier as well, but typically once you have a deal under LOI, that's the time to really make sure that you have your banking in order. And so what we're going to want to see is, hey, how has this business performed? We're going to ask for 3 years of tax returns for that business, and we're going to also want year-to-date P&L and balance sheet for that business as well. And then we're also going to want to know a little bit about yourself. What's your experience level with this type of business in this industry? We do prefer people who have industry experience. And if they don't, we want to know how they're going to overcome that hurdle because that's an important piece of this. And I'm sure when we talk about why some of these deals fail, that's going to come up because that's one of the main reasons why we see some of these businesses fail. The other thing outside of experience that we're going to want to know about you as a guarantor is, what's your liquidity look like? What's your net worth look like? Can you actually afford to be able to buy this business? And there are some creative ways that you can get around the equity injection requirement nowadays, at least in terms of money that's going to come out of your pocket as a buyer. But there's always going to be some type of an equity injection, at least 10% requirement that's going to come about whenever there's a change of ownership using an SBA loan. So we need to kind of understand how you would like to approach that as well. But I would say that that's really the starting point for SBA financing and business acquisition.
No, that's perfect. I think on that note, if I'm approaching you and the lender, what companies, give me like 3 companies that you generally like seeing, or 3 companies that you don't like seeing and are harder to underwrite for your end, for those out there looking to start a process or get interested in the process.
So for us, I'll start with what we don't like. Right now, restaurants, that's just a difficult industry. We're never really, most banks are never going to be that favorable on restaurants. Doesn't mean you can't get one done. I've done plenty of restaurant deals, but restaurants is one of those industry specific deals where I say, I really want to see somebody who really knows how to run a restaurant. Like I wouldn't lend to myself to purchase a restaurant, for example. I'm
Right.
somebody who, I have certainly some business acumen. I would like to think I am an entrepreneur outside of what I do as a lender. I own several businesses, and they do make money. Restaurants are very specific, and I personally would never want to operate a restaurant because I'm not from that world. So that's certainly one that would jump out at me. The other one would be e-commerce. We just don't really do e-commerce businesses here. And that's mostly because of the fact that we've had some bad experiences with them in the past. We have lent to plenty of e-commerce businesses, especially ones that were on Amazon. And those do go bad. You are at the mercy of the Amazon algorithm. And if all of a sudden you slip 5 spots on the page when you're using the search function, all of a sudden you might lose 100,000 in revenue overnight. So things can happen, and that's certainly a danger to us. And then we've also started to shy away from trucking businesses as well. We've seen some industry and economic factors start to put a lot of pressure on that industry. And so we've kind of shied away from it. Certainly the ones out in California in particular, there was a law that passed that made all 1099 employees go to W-2, which has crushed some of those folks out there. So we've kind of shied away
Sure.
from those as well. And then hospitality, hotels, those can always be a little bit difficult as well. So we've also shied away from those a little bit more over time. But again, one thing I would say is that just because we don't necessarily love an industry doesn't mean that there's still not somebody that we would lend to for that industry. It's just kind of on a case by case basis.
Oh,
Whereas,
absolutely.
with
Yeah.
some of these with some of the stronger industries, we'd probably be a little bit more liberal. I would say the obvious ones are going to be, hey, who doesn't like to lend to doctor, lawyer, CPAs? Those are your professional service businesses. Those are always going to be pretty high in demand. I would also say your service-based businesses, HVAC, plumbing, electrical, things of that nature. Those are usually pretty license heavy. So you do need somebody who has a direct experience, and we would certainly prefer that they have some licensing, that kind of goes hand in hand. And then we like medical as well. Obviously, if you can lend to medical, usually doctors pay their loans back, veterinarians tend to pay their loans back. So those are industries that I would say are definitely going to be A+ industries for ours. But we do a lot of different industries.
Yeah.
Outside of those 3 that I'd say we probably would pass on. If you have a deal and it's in any besides those 3, it's still worth a conversation for sure.
Yeah, and absolutely, to Sterling's point as well, every business is a case by case business. So you might have something in trucking, for example, that is an exceptional business, but you might also have a lot of issues there, given all the changes in laws and stuff. So it is a case by case, but just wanted to get some industries that your folks like to underwrite and not. And then move on to our next question here, which is, let's say I do want to move forward. You mentioned on a little bit before of the tax returns, but just to kind of circle back, what are the initial steps and in terms of documentation that I'm going to need to get from my seller to come to your bank?
It's really pretty short. It really comes down to just financials, right? Let's start there. Does the business actually make enough money to repay the debt? because if it doesn't cash flow, you're going to have a really hard time finding financing for it, number one. And number two, it's also going to have a really tough time appraising because these deals, any deal over 250,000 when goodwill is being financed, is going to require that we get a third-party business valuation done, which is basically a business appraisal. So if the business does not make money, it's going to be hard to put a multiple on zero. So let's start there.
Yeah.
Now, in terms of what you actually need to get from the seller, we're going to want 3 years of tax returns. So ideally, we would love it if a seller had 2023 filed at this point. Some are still on extension, but in an ideal world, we'd have 23, 22, and 21 taxes. And then we would have an interim P&L and balance sheet for hopefully the first 5 months or so of this year. And that's a good place to start. And then what we'd want on top of that is if there is some type of a SIM or some type of a detailed summary of what the business actually is and does, that'd be great to also have that provided by either the broker or the seller. And then we want to know what the ad backs are going to be. Now, there's always going to be some ad backs, but I will tell you that if we start having to get nitpicky on the ad backs, the deal only works because of the ad backs. If there's more than 6 or 7 ad backs, you're probably stretching the deal a little bit. It's probably going to be something that once I get into underwriting, I'm going to start getting some pushback on. And I probably would push back on it before I even got it into underwriting in the first place, because I want to make sure that I'm submitting deals that are actually going to get approved. Those are really the main things, so it's pretty simple.
Yeah.
It's, hey, let's get the financials, let's get the ad backs, let's actually know what this business actually does. And then from there, I can start talking to a potential buyer about, hey, what is it that you do? What's your experience? How's your liquidity? How's your net worth? And are you going to be a good fit for this business?
Right. And I think that's a key point here too, is just to go into that a little bit, talk about, for me, right, I have a financial background. So if I was going to go by a very technical industry, it probably wouldn't work. How do you view sort of the general or finance background versus maybe no background versus a third being very industry background? I know before you mentioned that you really focus on the industry folks. Just kind of give us a few reasons why you wouldn't lend to someone who doesn't have industry experience, maybe just to bring it all together, but understand, what I need to know if I'm going to buy this business, and what reasons you might say no to people who are looking to borrow.
Yeah, sure. So the reason that we would say no to somebody who's looking to borrow who doesn't have industry experience is because we have experience, because we have been lending for a while, and unfortunately deals do go bad, and we've had to deal with that. And we know the reasons why deals go bad, because after the fact, we're always going to look back and do a postmortem and say, hey, where did we make a mistake in lending you this money? And a lot of times it does go back to direct industry experience. It's a difficult for somebody who, as smart as you may be, maybe you just have a MBA behind you and you want to go in and you want to purchase a plumbing business, for example, and you think that you're going to be able to walk in and tell folks that have been doing plumbing for 25 years that they're doing things incorrectly, and that these are the way that things are going to be done moving forward, and you're going to make a bunch of changes to the business. And we see that happen from time to time, and sometimes those situations end poorly. People will walk out on you. People will not respect you. If you don't know what you're talking about, you don't have the technical expertise, sometimes people will flat out just not listen to you. And that can cause real strife in a business, and sometimes that can eventually lead to a failure. Yeah, it's important that there's somebody who in a deal who does have some type of experience, or there's some way that you can bridge the gap. I mean, some ways that we've gotten comfortable with it is maybe a seller stays around for a while. Maybe we do a partial buy, so it's not the full 100%. Maybe you buy 85% or 90% of the business, and you kind of go about it that way. That's something that I've seen us get comfortable with. Also large seller notes, where the seller is going to be taking on some of that responsibility as well. So it takes some leverage off of the bank. That's something that I've seen us get comfortable with previously as well. Or maybe you have a strategic partner. Maybe you have somebody who you bring in who maybe has minority ownership or something along those lines. That's something that I've seen us get comfortable with as well. So there's some options. There's multiple ways to skin a cat. Just because you don't have direct industry experience doesn't mean it's necessarily a dead deal. But you do need to maybe get a little creative and think about how you're going to overcome that weakness, because I guarantee you a bank is going to be concerned about it.
Yeah, no, and it's very important for everyone to hear that. It's just kind of make sure you know what you're talking about before you go in there, because these banks will, they will say no. I mean, they don't want to lend to anyone on the street. They want to make sure that they're getting paid back on these loans and they're taking risk as well. So, for our group, I guess to continue on that path, what kind of disqualification factors do you see up front in some of these deals where searchers will come to you and say, "Hey, I want to take out this loan, but it's an immediate no." You've already touched on a bunch of them, but just anything else that maybe you haven't included on, or things you see in the market.
So one thing I would say for some of the searchers out there, it does depend a little bit on a bank by bank basis how willing they are to kind of play ball on the search fund model. There are some banks who really believe in the search fund model. There's some divisions out there that kind of specialize in working with search funders, and they kind of understand that. But not every bank does. Just to be completely honest with you, I would say my bank kind of falls in the middle on that. There are certainly some search funder deals that I have been able to get done here, but we're not going to be the bank where a young person comes to us and maybe they have $10,000 to $15,000 in liquidity. They have no net worth whatsoever. They've never owned a business. They don't own any real estate or a home. And they've said, "Hey, I don't have any direct industry experience, but I've got a board of people who I can call if I get in a pickle," but they don't have ownership, and they're also not going to they're not going to guarantee. And the only reason I'm able to afford this business is because the seller is going to hold financing on 2 years for the full 10% equity injection. Like that's just a no for us. That's not going to be a good fit for us. I would say again, it comes back to two things. It comes back to the business that's being bought and the person that's buying the business. It takes two to tango, and if either of those just don't make sense, then it's just not going to be a good deal for us.
Yeah, no, and thank you for sharing. It's very very helpful for those who are kind of getting new to the process. Let's go to the other side of it. Let's say you did accept the loan, and everything's great. What's a typical process look like, right? Let's say I come to you now in June, and I'm trying to buy a commercial cleaning services company. Everything checks out. Walk me through a typical just timeline and process so I can understand on my side how long it might take, or how short it
Yeah.
might take.
Yeah, absolutely. So again, this will differ from bank to bank as well, but we have a really good process here at Bay First. A lot of our transactions are usually about 60 days from start to finish. For a lot of other SBA lenders, that process can be more like 90 days, and for some, probably 120 days. But yeah, we have a lot of manpower here, a lot of resources that are devoted to specifically doing SBA and nothing but SBA all day, every day. That's, Credit Bench, the platform that I'm a part of, is a division of Bay First, and we're one of the top 10 SBA lenders every year in terms of units and volume. Is because we dedicate the manpower to having a really good process, because you can have the most flexible credit appetite in the world. If your process is really poor, it doesn't really matter, because processes would actually get your deal from the starting line to the finish line. So that's really what matters. So the process for us, typically it starts with a conversation just like this. You're going to talk to me about your deal, why you're attracted to it, kind of your thought process for how you intend to run the business long term, how they've done historically, just a kickoff call basically. And then from there, I'm going to send you a checklist of information. You'll go ahead and send over some initial items. Again, we're going to want the financials on the business that you're going to be purchasing. We're going to want 3 years of tax returns for you personally as well. We're going to want a personal financial statement, business plan, projections, things of that nature. We're going to go ahead and start looking at that now. And then I'm going to issue you a term sheet, and then you're going to review that. It should tell you pretty much everything you need to know about your actual loan. What's the loan amount going to be? How much are you going to be bringing in equity? If there's going to be seller financing, what that's going to look like. It's going to be pretty much spelling out all the details of the actual loan. You'll review that. If everything looks good, send it back, sign it. We'll collect an expense deposit to get those third-party reports ordered. And that's kind of the end of the first step in the process there. The next step in the process is going to be underwriting. So we have a pre-underwriting stage where basically we do the rest of the document collection, because I'm just really trying to get enough to be dangerous, right? I just want to get enough to get you a term sheet. I know what the deal is at a high level. It makes sense, but we still have to fully underwrite your loan. So I'm going to put you in the next step of the process. Then we're going to reach out to you, one of our processors. They're going to ask for a much larger list of information to get you actually into underwriting. Once they have that, then you'll go into underwriting. Underwriting will then spit out a list of questions. I'll get that reviewed with you. We'll get those answered, get that back to underwriting. Then the actual process typically takes about 10 business days or so from start to finish. And then from there, it will go into a committee if it needs to. At my bank, deals over $1 million go to committee. Anything less than that is just a credit signature. So then once we go to committee, assuming all is good, I will, at that point, issue a commitment letter to you. And that's kind of the end of the second step of the process. Once you get the commitment letter, you know, hey, we as the bank, we're willing to lend to you. And again, it's going to be just like the term sheet. It's going to have all the terms on it. Nothing should have changed really from the initial term sheet. And if it did change, we would have had that discussion by now. So there's no surprises. And then you'll sign the commitment letter. And then from there, we'll move into the final step, and that's closing. So we'll then reach out to a third party attorney. And then they'll put together one more final checklist of the information that you need to actually get your loan closed. And then it's just working on that final checklist. And once we have everything, we're usually able to schedule a closing within 72 hours. All in all, again, it's usually about a 60-day process from start to finish for most customers. I did one last year in 34 days. I did one earlier this year in a little over 40 days. So it certainly can be faster as well. A lot of it does come down to the guarantor and how active they are and how quick they are with doing paperwork. If they're super hungry and they know they need to close quickly, then we can usually expedite the process. But for most people, it's usually about 60 days or so.
That was extremely helpful. Thank you. And on that note, for that process, can you just talk a little bit more about the personal guarantee? I know a lot of folks are trying to understand the SBA better, and the main difference, obviously, here is in SMB world, you're taking on a personal guarantee versus private equity folks are theoretically putting that debt on the company. They don't have to worry about it. So, how do you look at folks' personal financial statements when they're coming to you for these guarantees? Obviously, the business matters a lot, and is most of the underwriting, to your point, of the process you put through, but also what notes or red flags are there in the PFS that might really hold up a deal or cause a problem on your end? Is there a liquidity number you're looking for, or overall net worth, or how does the bank think through the PFS part?
Yeah, no, that's a really good question. So I guess a good place to start is just the knowledge that anybody who's 20% or owner, or excuse me, anyone who's 20% or more of an owner in the borrowing entity will have to be a guarantor on an SBA loan. That's the rule. So, we do see a lot of structuring happen where maybe there's a guy who has some deep pockets and maybe he wants to be 19% owner, and he's propping up a younger guy or gal who maybe somebody who just has industry experience, but they may just not have a super strong balance sheet. So they need the equity from the person who's 19%, and then they're going to be the 81%. We do see that from time to time. When it comes to the personal guarantee, it's one of those things where outside of that metric that I just said about the 20%, once you kind of meet that, outside of that, there's really no hard and fast rules at that point. It's just kind of on a case by case basis, and it really comes down to credit risk appetite of the bank. There's no real specific metric in terms of liquidity per se that I need to see in order to get you approved for a loan. It just comes down to how your loan is structured. So for example, if you're going to be purchasing $1 million business and you're going to be bringing the 10% equity injection, so call it approximately $100,000, and I look at your personal balance sheet and you have 50, well, then we have a problem, right? It's just kind of a common sense approach at that point. Now, in terms of a personal guarantee, if a loan, I guess, goes bad potentially or something along those lines, yeah, it is a real thing. We're going to look at the business first and foremost. The business is the borrower and it's our primary source of repayment. But you got to realize when you're signing a personal guarantee, you are personally guaranteeing that loan is going to be repaid. And if it's not repaid, then we are going to essentially come after you personally. And that obviously has ramifications that come along with it. So Hopefully that kind of answered the question in terms of the personal guarantee and kind of how we view it. Happy to go into it in more depth if you'd like me to.
No, that's perfect. I just like to make sure people know it's a serious thing and that when they're applying for it, it's definitely something to think through. It's not everything it's portrayed on the internet, and that can be ugly too. But back to the positive side of things. Let's say I do get my loan. I've gone through the process with the bank. Everything checks out, and I'm ready to buy a business. On your side, how have how's the interest rate cycle been, just given the chaos in the last couple of years? I mean, now I see rates anywhere from 8.5 to 11%, but just curious to how you've seen the rates change from maybe 5 years ago to now, and how you think they'll be going forward.
Yeah, so obviously it's tough to say how they're going to be going forward. I think that most of us believe we're probably at the top end of the rate cycle right now. I think the economy was obviously running super hot coming off of COVID and some of those relief programs, and they needed to kind of pump the brakes on inflation. The rates have jumped up dramatically in the last 2 years. There's people who at the beginning of 2021, or really even at the beginning of 2022, they got an interest rate of 6% on their 7A loan. And those same loans today have an interest rate of 11 and a quarter. Because what you do have to remember is the vast majority of these 7A loans, especially the ones that are for business acquisition, are going to be prime plus a spread, and they're going to be adjustable quarterly. So that means that, for example, if the Fed were to raise rates and the prime rate goes up in January, you're going to see a change on your April 1st loan payment. So it's going to adjust based on the calendar quarters. There are people in my portfolio who got a loan at 6% who are now at 11 and a quarter. And obviously you can imagine what that does to your cash flow. It can certainly put a hamper on your business and your ability to pay your loan. Luckily, I haven't seen a ton of issues from that standpoint. I think most of my customers are still doing very well and they're able to make their loan payments. Obviously, there are a few who are struggling, and that's going to happen in good times and in bad times. Now, we'll have to see where interest rates go. There has been some talk about some rate reductions happening this year, but it's the middle of June and I haven't seen any yet. I don't think that the three that they were talking about back in January are going to happen this year, but who knows? This is also an election year as well, so it's tough to predict what they may do when we get a little closer to November. But yeah, this is certainly been new for me because I started in SBA lending in 2016, and rates were creeping up then, but obviously when COVID happened, everything kind of went right back down to the bottom, kind of where it was coming out of the housing crisis, which is when I got into banking back in 2012. This is the highest that I've seen it. I have joked that they kind of turned me into a hard money lender overnight, but that's just kind of the world that we're living in now. And 11 and a quarter is what you're going to see on most 7A loans that are going to be put out there for a business acquisition right now. And that's just that's the market. And so you have to decide whether or not you still want to make that purchase in this market, or if you want to forego that and potentially wait for interest rates to come down. But I think what some people found is that if they wait, they may be waiting a long time. And some people want to get their deal done now because time is of the essence. There's really no right or wrong way to approach it when it comes to the interest rate discussion. But if it's me, I always think that you want to strike while the iron's hot, and if you found a good deal, you should try and get it done.
No, thank you for that. And then speaking of you are a business owner yourself. Congratulations on that. I'm sure it's had its ups and downs, but it's always fun being an entrepreneur. On your end, what do you advise new business buyers on what not to do after they take over one of these companies, given you have experience being an owner yourself?
So what I would advise, if you're doing a business acquisition, so I've never done an acquisition. My deals have been startups, and they've been franchises for the most part. So that's obviously a different thing. But I would
Yeah,
say,
I guess I meant more of like just as a business owner and a lender, you have the head of both. So it's like if you're giving someone a loan, what do you tell them on the way out of like, here's your new term sheet, but don't do this?
in terms of getting approved, or in terms of after a closing.
in terms of after a closing, let's say in this case for this hypothetical, I'm a new buyer of a business. I've just gotten approved. I've gone through closing, and now I'm going to operate this business. What are your words of wisdom to someone who's taken over as an owner of a new company in the SMB world or in this space? Just kind of
Well,
curious since you have both views on it.
yeah, no, this is super simple. It's don't mess it up. You bought the business for a reason. It's been making X amount of money for so many years. Some of these businesses have been around 10, 20, 30 years that are being purchased. Just don't mess it up. It's the simplest things like blocking and tackling, right? It's like just do the simple stuff and make sure you get your footing under you, make sure you get your bearings of how things actually operate. Once you've had the business for 6 months and the transition is going smoothly, if you want to make little tweaks here or there, if you want to put in a new CRM or whatever it is to make this more efficient, you can start doing those types of things, but just don't come in on day one and start spooking people. Don't burn bridges with the people who actually are the business. Make sure you have a good relationship with them. Make sure that they feel like they can trust you, because it's more you that has to impress them than them that has to impress you. If you come in with that mindset and that mentality that you're going to help those people be the best version of themselves that they can be, I think that that's a good mindset for success with the business acquisition. And that's where I've seen some of my guarantors be extremely successful. Again, the ones that typically fail are the ones that try and go in and make wholesale changes on day one, and they end up burning bridges inside of their own organization. Because once you lose trust, it's almost impossible to get it back. So, that's the one thing I would say is just, steady as she goes. Don't rock the boat and just don't mess it up.
No, thank you very much. I think that's perspective we were looking for, and we often tell folks that's the main goal is pay back the debt and don't change anything for the first year, and just kind of make sure you take over the keys the right way, and then you can add all the fancy SEO and CRM stuff afterwards. But just
Yep.
understand that you're taking over something that's been run for 25 years, and it needs a little bit of love before you make all your changes. So um, I appreciate the time. I think that's all of our questions for today. Thank you so much for joining, and for all those out there. We'll try and put this on YouTube and Instagram, and then Sterling, we'll probably have you back on for more questions because I'm sure we'll get a flood of questions after all of this. But really appreciate it, and hopefully, talk to you soon.
Yeah, absolutely, guys. Pleasure to be here. And, feel free to check out some of my content. I'm sterling.sba on Instagram and on TikTok. And I'm also on X or Twitter, whatever you want to call it. And I'm also on YouTube as well as Sterling SBA. So feel free to check out some of my content. We go back and talk to some of my old customers and just in general, kind of talk about the SBA process and how it can be used to help businesses. Thanks again for your time, Dennis, and happy to be here. Look forward to seeing you again in the future.
Yep. Talk to you soon. Thanks so much.